on. Whether you're new to trading or just new to our group, welcome to Opening Playbook. Our mission here is to be a bridge for both new and advanced traders to go beyond outdated market narratives into deeper understanding. We offer market insights, that's timely analysis of what's moving the markets right now, trading education to help you build real skills beyond surface level tips and tricks, and live trade ideas, real-time recommendations you can act on immediately. Opening Playbook is a free, daily, live webinar. The usual stars of our show are Nathan and Graham, but on Thursdays, we welcome our guest hosts, Silas and JD. Silas Peters has been an active trader for over 15 years. He focuses on analysis using price action, institutional levels, and historical data. He's executed trades and large block order flow for hedge funds, banks, institutional investors, commodity trading advisors, and more. He's helped build and manage several futures and equity firms, and he's the co-founder of Blue Marlin Advisors, LLC. JD DeLugash has been trading and investing for 38 years. He's known as the Rational Trader. He's the innovator of the 2 Sigma trading strategy for identifying undervalued stocks about to bounce. He harnesses market volatility using technical analysis, quantitative research, and his nearly 4 decades of experience. And he developed the Market Scorecard, a tool used by novice and professional traders. Now, a lot of people in the stock market education industry will tell you that trading is easy if you just know their quote-unquote secrets. Well, that's not us. We'll tell you the hard truth, which is that trading is complex and takes time to learn. But we make the learning process much easier. The Opening Playbook exists because a lot of traders have trouble succeeding because they believe many of the myths out there about the market and trading. We'll dispel those myths and equip you to become a better, more mature trader, giving you the opportunity to be more successful, whether that means using our systems, tools, and strategies, or just trading on your own. Remember, our goal is to be a bridge for both new and advanced traders to go beyond outdated market narratives into deeper understanding. Now, it's important to remember that you should never trade with money that you can't afford to lose. Of course, nobody likes losing, but there's a difference between losing some of your investment portfolio and losing the rent or grocery money. So please don't trade with money that you can't afford to lose. And let's be ultra clear, any type of trading involves losing some of your trades. It's inevitable. Controlling your risk will keep you in the game, and we can help you learn structures and strategies to do just that. Our promise is that we'll be honest and transparent with you about what works and what doesn't, what you should make your own decisions about, and what rules we believe you should always follow. And here are some rules of the road to get you started. Stay calm, try to trade without emotion involved in your decisions, go at your own pace, don't try to keep up with us or other traders, and ask questions freely. We really do want to help in any way that we can. And to help you get started, we'd like to offer you some free information. Answer a few quick questions by clicking the link in the banner I'm posting above. And for answering that quick survey, we'll give you custom content to better help you by using your feedback to improve our classes and education, and give you a free options cheat sheet, a digital, easy to understand options guide that will look something like this. Now, I'd like to give you some tips on using our webinar platform before we get started with our regular program. The button next to number 1 here, we call the hamburger button. That will collapse the green column on the left, and you can leave it collapsed because we don't use it for anything. Number 2 is the pause button. You can pause and resume the presentation whenever you'd like. Number 3 is the mute button. You can mute and unmute the presentation's audio. If you find that you suddenly lose audio during the presentation, make sure you haven't accidentally clicked or tapped on the mute button. Number 4 is the main announcements section, where trades that we take in the current session will be posted, as well as helpful links that can always be found there. Now, this section will only be visible if you're on a large screen. If you're on a mobile device, you won't see announcements here, but we do have another area that you can see them that we'll get to shortly. Number 5 is the toggle for going between light and dark mode, whichever you prefer. Number 6, the monitor icon will enlarge the presentation area without hiding the communications or chat area. Now, this button is shown in 2 places, and I highly recommend using this because it'll give you the best view of the presentation without hiding the chat from you. Number 7 is the picture-in-a-picture button. This will reduce the presentation to a floating window so you can do other work behind it, such as go to your broker platform on a mobile device. Number 8 is the full screen icon. This button will enlarge the presentation to take up the entire screen, covering everything including the chat area. Number 7 and number 8 may or may not appear for you depending upon what device and browser you are using. Number 9 is the low latency button. Toggle this off if you're having any audio or video issues, such as buffering. Number 10, all the way on the right, is the communications area. This is where group chats, announcements, and private messages will appear depending upon the tab that you have selected above. At the bottom, number 11, is where you'll type your outgoing message. You can press enter or tap or click on the green arrow to send it. Number 12 is where you can start a private message to a host by tapping or hovering on one of their group chat messages and clicking the double speech bubble icon that appears. Now, you can only private message hosts, not other attendees. At the top, number 13, that button will collapse the communications area, giving you a larger area for the presentation, but you won't see any of the communications that are going on. Number 14 is the group chat. This is where you'll read and write messages that the entire group can see, and this is the default tab that you'll see when you sign in. Number 15 is the announcements button. This is where you can see those same announcements that were in the larger area that we covered earlier, but this will be available whether you are on a mobile device or a larger screen. Number 16 is the private messages tab. This is where you can see any conversations that you have started with the hosts or they have started with you. And if you have a new message waiting for you, you'll see a red dot below this icon in the toolbar at the top. And last but not least, number 17 is the button that will pop out the communications area into its own window. This is useful if you have multiple screens and you want to go full screen on the presentation and view the chat in a separate screen. Now, we have a version of this guide that I just went through that you can view on your own. The URL to get to that guide is marketspg.com/wisepub, and there's now also a link to it in the announcements section. And that's it. So once again, welcome to Opening Playbook. Don't forget to complete that survey to get your free cheat sheet. And now we're going to get to our theme song and then start our show at the top of the hour.
Flip the page, it's time to start the game. Graham and Nathan calling out the names. Opportunities knocking loud and clear. The Markets Playbook is finally here. Opening Playbook, we're ready to roll. Daily moves that fire up your soul. Strategy sharp like a razor blade. This is where the big plays are made. Charts are lighting up the morning sky. They spot the trends with the hawk side. Options and plays in a live display. This is where the big plays are made. Oh. Charts are lighting up the morning sky. They spot the trends with the hawk side. Options and plays in a live display. Every move counts and Opening playbook, we're ready to roll. Daily moves that fire up your soul. Strategy sharp like a razor blade. This is where the big plays are made. Oh. Step by step, they break it down. No confusion, no spinning around. With every trade, they set the tone. Making big calls on their trading phone. Opening playbook, we're ready to roll. Daily moves that fire up your soul. Strategy sharp like a razor blade. This is where the big plays are made. Oh, this is where the big plays are made. Oh. Opening playbook, we're ready to roll. Daily moves that will fire up your soul. Strategy sharp like a razor blade. This is where the big plays are made. Oh.
Welcome, everyone, to the opening playbook for Thursday, June 25th. I hope you're having a good morning so far. As usual, we have Mr. Silas here with us on Thursday morning. How are you, sir?
Good morning, Mr. Mann. How are you?
I am doing all right. I found a little interesting this morning that GDP numbers looked good and the market opened up with a gap up, but then decided, let's take a vacation and go south for the winter.
I mean, it's been a one-way trip to the upside and right back to the downside, right?
Yeah, little
It's
interesting reaction, I think. I'm not sure it's reacting to GDP or any of that news. Honestly, I don't know. I don't know quite what's driving it down, but maybe you have some insights, or maybe it's really, relatively speaking, not that significant, right?
yeah, I just got settled down at my desk and I was kind of surprised. I figured that we would be um probably pulling back a little bit today. There's a lot the market's quite thin in terms of volume and liquidity. And the moves overnight, which of course we saw what the 70-80 point move when the cash closed yesterday up
Yeah.
overnight. That's all low volume, and so you kind of expect to be cautious as you enter the new trading day and expect at least some corrective type moves. And the market, at least in terms of what's going on in the futures markets, will want to attempt to kind of close the overnight gaps. And so I think the market's just kind of sitting a little bit on thin air right now. I'm a little surprised to see us like correcting the entire move, all the way up from 7,500 back to yesterday's low, and
Yeah.
then down to 7,390. It's a huge range. So be interesting. Yesterday was interesting. Um, I guess to say the least. I mean, we had some really good trades on the intraday basis. We got stopped out of our one of our swing positions, and then we were kind of like, well, I guess that sucks because now the market's up 80 points in the overnight, but now we're not regretting it because we've quickly given that back up. So
Yeah,
it's
it's funny because, if you just like kind of checked in right now, you'd be like, oh, market's pretty much flat today, but you missed almost like a 1 point kind of yo-yo already this morning, and it's only 10 a.m.
yeah. I
I
mean,
said 1 point. I think I meant 1%, but whatever. Yeah, one
yeah, I
one
mean,
percent.
well, or 100 points, 100 points
Yeah,
in
yeah,
terms of S&P 500, SPX, whatever it is you guys are, whatever we're talking about. So
yeah,
um, it's interesting, the the gamma exposure by dealers are sitting near its lowest annual percentile, meaning that it's very thin, and basically market makers are in a position where they can amplify directional moves rather than absorb them. So, because as we talk about the positive gamma, rallies are sold, dips are bought. Now it's kind of rallies get bought into and selling gets sold into. And so you kind of combine that forced with some of the max positioning going on on the CTA cohort. You can see just kind of disorderly price action, which is what I think we're seeing right now.
All right. Well, I'm going to let you kind of run the show here, and I will be in the background for a few minutes, and then let me know if you need anything.
Okay, cool. I'm going to run through maybe a couple of slides here, just kind of look at the overall landscape as we head into the end of the week, and then we'll get into the workshop. If that sounds good. All right, guys. So what exactly would you like me to address? So we're playing the swings and market, as we just talked about, the market is challenging from a swing perspective, just based on what we talked about. Up 100 points in the overnight. We'll go back to yesterday's session. We go back to yesterday's session as a whole, and I guess let's just take a look at the S&P 500. How about we do that? Let's see, where is my share screen? There we go. So we come over here and see screen 3, boom, boom, bada bing. Okay. So we look here at what's going on in the trading view. So, you look at this is the 1 hour chart. So let's actually just go to the daily chart. I was taking a look at old Mu here before I got on. So we look at this, yesterday, let's go to the 4 hour. So I'm all mixed up here. All right, let's see, what was yesterday? Wednesday. So yesterday we were up here at we started down here, 73.70s. We're up here at 74.30. The end of the day, kind of on the lows, and then you can see what has happened since. We went down between the lows yesterday, had a reversal there at the close, and then we were like, oh man, we got stopped out prematurely, up 80, 90 points up or so, in the overnight. And then we pretty much erased all of that. So we're still working this 1 hour bar. But here's where we are. If we look at just at the bigger picture on the daily, this is where we are. And we've kind of got, these two lines in the sand, if you will. So 7,200, we'll call it 7,200s and 7,500s. So we're right smack in the middle. And usually what we call this is no man's land. So if I were to get if I wanted to get purely directional, I don't really have a justification to do so, because we're in this gray area. And so for a pure directional perspective, I'm looking at 7,500 to possibly look for new shorts, and the 71 to 7,200 here as areas to get long. So you can see this kind of broader distribution going on here in the SPX. And if we come over and look at the seasonality of the S&P 500, what we're seeing right now isn't abnormal. It's pretty normal for looking at the data set and go back 30 something years. We see kind of a mean reversion type move into the last part of the month. And, here we are in June 25. And so we can expect, possibly further weakness. And what we do look for is a seasonal turning point here, right around the end of the month and start of July. In fact, this is one of the stronger seasonal signals that we have in the playbook. Nothing's guaranteed, of course. It's just, working with the data set. And so we go back to 2026, price and time are pretty much in line. pulling back, so we would favor the sell side. As part of the snowball system, we're trading off of 30-minute bars, and we don't really rely so much on direction. We're relying on theta and time decay and collecting premium. And so despite kind of the whipsaw action and the volatility, 100 points up, 100 points down, we got out for a couple dollar loss. Before that, we got out with $6 gain. And so that's why the structure of that setup and structure of that trade are favorable because of the risk, the risk to reward. So what I'll do here is I'll share a couple of slides and some data with you guys, if that's okay. And see if I can get. See if I can switch my screen. You guys hear me okay?
Yep.
All right, cool. Let me share a couple of slides with you guys, and then we'll get into the meat and potatoes of things. So
Sounds good.
All right, let's see, June. Boom, there we go. All right, so put this together a couple of days ago, and nothing's really changed. I'm just going to share some data with you that's it's not like intraday data. So this is kind of when we started on Tuesday. We saw a lot of pressure from that memory complex. Korea's Kospi index collapsing 10% overnight. This is what I want to look at though right here is that we've been kind of talking about this theme is that price action through month end will be driven more by flows than fundamentals as investors are kind of navigating month end, quarter end, and first half rebalancing activity. The market is, basically set to absorb the largest options expiration in history and significant quarter end pension rebalancing flows and a broader reset in positioning across other major investor cohorts. So systematic strategies remain skewed towards selling more than potential buying would suggest. Volatility remains elevated. If the S&P 500 continues, printing large daily moves, then volatility control funds in particular will become a true headwind as the market continues to lack liquidity. And that's something that we kind of talked about. Now, on the flip side, funding spreads continue to increase. So we track this metric as a proxy for institutional positioning in short-term credit markets, and it's proven to be a reliable leading indicator. So ahead of the Liberation Day tariff shock back in 2025, the Middle East-driven drawdown in early 26, spreads compressed as institutional investors rotated risk off positioning before price declines materialized. Now today, the dynamic is notably different. Spreads are moving higher, not lower, suggesting institutions have not really yet made that same rotation. Now, the debate has shifted to how investors should own the AI trade, not whether to own it. So how to own it, not whether to own it. So the secular backdrop across both the U.S. and Asia markets remain intact. CAPEX expectations are holding up. Earnings revisions continue to push higher. Inflows into U.S. technology still remain significant. But what has changed is overall market structure, right? Leverage continues to build. Implied volatility across large cap tech expanding meaningfully relative to the broader market, even as prices grind higher. Now, if we look at the prime book, so prime book is the books and the positioning of the hedge funds and the institutional desk that we track and follow. So global hedge fund net leverage has reached multi-year highs, with the pace of increase over the past month ranking amongst the sharpest in recent history. And that's driven by a combination of active net buying and market-to-market appreciation. The AI trade is certainly alive, but it's evolving, right? Capital, it continues to rotate out of some of the mega cap concentration and into the broader ecosystem. while simultaneously broadening into financials, cyclicals, and even into Asia. But overall, hedge fund conviction remains high. And so this is really a market in rotation and not necessarily a reversal. Couple more slides here is, looking at systematic strategies, and mentioned this earlier, remaining near max long in equities. So CTA positioning, commodity trade advisors stabilizing a little bit as the rally has extended, though volatility continues to kind of act as a position sizing constraint. And the relationship between CTA linked and VIX is statistically meaningful and inverse. So as trend followers accumulate longs, they absorb supply and suppress realized volatility, reinforcing the conditions that keep them positioned. So that loop is two-sided. The same dynamic that anchors volatility on the way up also amplifies it on the way down. The asymmetry between buying capacity and potential supply is rather stark. So in a down market, we look at this slide here. In a down market, CTA de-risking alone could generate selling an order of magnitude larger than any incremental upside buying, with risk parity and vol control funds. They're in purple and maroon, respectively, could add further pressure. So the triggers remain. With that being said, what we're saying is that when these sell control funds kick in, it's going to be much more meaningful than buy control funds. But the triggers for this to happen are still distant given current trend and volatility conditions. So we estimate that it would take about 3 to 4% of additional selling from where we are to trigger significant controls to kick in. As we're ending the month here, and I guess I won't be back until the start of the new month, so I think this is a good kind of place to segment into, is that the first half of July consistently ranks amongst the strongest one of the strongest seasonal windows in the annual equity calendar. This is a pattern anchored by mid-year flow dynamics that concentrate demand across all the major indices. So historically, the S&P 500 has averaged gains 69% of first half July observations, generating average return of 1.5% and a conditional mean of 3.2% in years where that advance materialized. And so the index has closed higher in each of the last 11 Julys. So I don't think something we'll take lightly. NASDAQ 100 exhibits a comparably strong seasonal profile. So since 1985, the index has advanced 76% of first half July periods, averaging a return of 2.2% return, finishing higher 17 of the last 18 years. Now, retail participation has historically also remained elevated over this window, and that's a factor that carries additional weight given the record levels of retail activity that's observed across the institutional desk. All right, so before we get to the workshop here, near-term price action is expected to be flow-driven rather than fundamentals-driven as markets kind of navigate concurrent month-end, quarter-end, first-half rebalancing, which we're getting into. So the coming weeks, we'll see markets absorb some of the largest options expiration on record, alongside material pension rebalancing flows, a broader reset of positioning across major investor cohorts. Order book conditions, though, and touched on this recently, remain kind of a key structural concern. The top of book liquidity has compressed to levels last observed around Liberation Day. So, but share volumes remain elevated. So this divergence between volume and liquidity is defining market structure risk at present. So we've got summer conditions setting in, and market sensitivity to order size in the markets will continue to rise. But once we get through kind of this month-end, quarter-end situation, that structural backdrop looks a little bit more constructive. Retail demand continues to sit at record levels. ETF inflows continue to accelerate. corporate buyback activity is robust, and equity markets are entering one of the strongest seasonal windows of the year. So, again, as we always say, guys, that's just data that we have, and we try to stack that on to our edges, right? So, let's go ahead and let's get to the workshop.
It might be helpful for the newer people if you just kind of explain um, flow versus fundamental a little bit, because they might not be familiar with kind of those different concepts. If you could just take a minute and do that for the newer people, as you know, because when you mentioned a couple times that it's going to be more flow driven than fundamental right now, they might not really understand that.
Yeah, so there's a lot of fundamental factors at play. We've got the inflation data, the GDP data, the rate talk with the new FOMC chair. We've got earnings as well, and so that's what we mean by kind of the fundamental aspect, the macro aspect. The flow driven meaning just actual institutional positioning, like volume and liquidity by desk. So we are in a very thin and low liquidity environment. So when we see these moves of, like we were talking about at the start of the playbook, gosh, we were up, 80 points in the, post cash. And then we gave that back right there at the open. And we're kind of like, well, what's going on? Why? I mean, there's news going on, there's fundamental drivers going on, but the reason that all that price action is exasperated is because it's on a very thin order book, right? So, you and I trading a one lot of the S&P or a three lot of the micro Nasdaq, we're not moving the market. Everything that you see is mechanically driven. So we're 90, probably closer to 95% of it is order and algo book driven, and that's on a thin order book. So if there's nothing in that book on the bid and ask, right? Those mechanical drivers will kick in and they absorb everything that's sitting in there. So it was absorb everything that's sitting on the bid and ask. So that's what we mean by flow compared to fundamentals. So, kind of like you guys talk a lot about the fundamentals. Well, what does this mean? And PCE and what how do we look into the CPI data? And I'm like, my take is, well, it is what it is, and let's just look at the tape and look at price action because that news is done and gone and baked into the chart. And so now the question is, okay, now how do we position based on what that news has already done for us in terms of price? If that helps or not.
Yeah, great. Yeah.
Um,
I think because we talk sometimes about like fundamental versus technical ways of trading, and those are kind of like some people do one or the other, some people kind of combine both. But when we talk about flow, it's it kind of falls under technical more so than fundamental. And you know, I'm not sure everybody kind of knew exactly what you meant just based on the fact that we don't talk about that a whole lot. So that was helpful, I think, for people.
no, I appreciate that. I am not I'm not your fundamental guy. You got a lot of experts in the pub that are the fundamental experts. I'm probably more the technical guy. Like what do you think about, somebody will say, well, what about Micron's earnings and the SpaceX IPO? I'm like, I
Right.
don't know, but
Yeah. Well, it's
I,
interesting. We cover both. We cover both there because
yeah,
both Graham and Nate, more so Nate, but both Graham and Nate have purely technical strategies, right?
yeah,
Like overnight options has absolutely nothing to do with what's fundamentally going on in the
yeah.
market. But they also talk about the fundamentals, having to do more with some of the speculative trading that we do, in the session and in some of the other programs. So they do cover both. But some of the newer people might not quite be caught up to those different concepts, and that sometimes we trade based on, hey, SpaceX is doing this and we expect it to do well, and and therefore the stock should go up. That's fundamental. And then sometimes we go, this is what's happening in the chart, and that's why we expect it to go up, and that's technical,
Yeah.
and we don't always talk about that those are different things and that we're trading for those different reasons.
Sure. Yeah, no, and look, what everybody should do is you try to marry up a little bit of it all, right? So
Yeah,
that's what you're trying to what we're trying to do is you marry up the fundamentals with the technicals, and not necessarily one is in front of the other, right? It could start technically, okay, now it's back into the fundamentals. Does that make sense? Or now we have this fundamental data, or we got this piece of data or this hot tip from at the cocktail party about some fundamental. Now let's back into it. Does it make sense technically? And that's what I do. That's what we'll kind of get into here in a moment
yeah.
with the
Well,
insider
like
summary.
your insider's dashboard, one could say, oh, fundamentally, this company is making a mistake in its industry. It's doing something wrong. It's not going to do well. You could say, oh, I think this chip maker is going to do better than that chip maker because it just came out with this great technology or something, or whatever. But if you see millions of dollars going into that company, and that they're going to have to support all of these options that are being put into this company. It doesn't really matter what their chips look like. If you got all this money either going into or going out of, betting for or betting against a particular company, that's going to run the chart more than what the fundamentals are, in that particular case. So I think sometimes, you have to look at, well, what's the stronger indicator in the, not overall, like is fundamental better way of trading than technical, but, are these fundamental signs stronger or weaker than these technical signs? And something that, they just discovered in R&D is not as strong as millions of dollars being played on the stock right now.
Yeah, 100%. I mean, and some of the best ideas come from the stocks that have some of the worst fundamentals and
Yeah.
and also look like crap on the technical side. Like they're completely beaten down, and that's actually where we kind of like to hunt. In the weeds is like,
Yeah. Yeah.
and you'll see some of these examples and case studies that in the workshop coming up is was like, why in the world are you looking at this biotech stock that's trading at a dollar? Look, nobody would be looking at that, but that's what the beauty of the dashboard at least flags it for us, and it gives us, okay, hey, an idea. Am I going to go spend hours and hours, combing through the fundamentals of that? Full disclaimer, no, I'm not.
Yeah.
But I'm look. Hey, this thing came up, and we've got multiple insiders and directors and CEOs, CFOs bumping two, three, $1 million, $500,000, and like, okay, hey, we're 80% off the highs. Why would you be touching this? And those have been some of our best plays, and so
Yeah. The
they did
low
a
hanging
pretty
fruit,
fine
so to
job.
speak.
Yeah, yeah. So
Yeah. Or the already injured prey.
yeah, we'll come and swoop in, and rather than waiting for it to rally $90 and then buying at the highs and hoping that it keeps going higher. Look, we'll take those beaten down stocks all the time,
Yeah.
put a little risk on. We're wrong, we stop ourselves out, and we move to the next play. That's why we kind of have a rotating basket of ideas.
Yeah. Cool. Well, if you want to show people that, I'm sure they would love it.
Yeah, yeah, let's get into it. It's fun stuff. So, let me do this. Over screen. All right. Stop sharing here. All right. All right, guys, let's get ready to rock and roll. Thanks for tuning in on Opening Playbook. Thanks for the crew to have me on here. Let me fill up a slot this morning. And again, Dave and I were just kind of touching on this a little bit, on this kind of insider activity concept, and that's what we're going to get into.